Hi everyone. So today I want to discuss with you a stock which I believe is undervalued in this lifetime high nifty, and I'll try to justify why I believe so, and then I'll discuss some key points from its quarterly results why one should consider buying it. So the stock I'm talking about is Supreme Industries. For those who do not know what this company does, Supreme Industries is one of the leading plastic products manufacturing company with 25 manufacturing units well spread across 12 states in India. It has majorly four business verticals, namely plastic piping division, consumer products, packaging products, and industrial products, wherein plastic piping division is the major contributor for its revenue and accounts for about 62% of its total sales. This essentially includes PVC pipes, fittings, etc. So we'll not be doing fundamental analysis here, but essentially we'll look at key points that suggest the valuation of the stock price. Let's look at the ratios here. So I'm using Screener to show you the ratios here. Firstly, we'll discuss price to earning ratio. As we can see, currently the stock is trading at a PE of 24.7. Now let's quickly check how market had been valuating it in the past. So if we go to the PE chart below, we'll see that the median PE for this stock for past 5 years had been 34. And comparing it to 24 at which it is currently trading, it is clearly undervalued. Even if we want to consider median PE for all time, it still goes to 24, which suggests the stock is at least fairly valued. Let's not rely on the PE ratio alone and let's see the PEG ratio. So PEG ratio essentially compares price to earning with the growth rate for the earnings of the stock. So essentially if PEG ratio is less than 1, it suggests that the stock is undervalued in respect to how the earnings are growing for the stock. So PEG, so now as you can see, PEG ratio is 0.73, which is less than 1, and again suggests that the stock is undervalued. Now let's see a couple of points why I'm bullish about this stock and why one should consider buying it. So this is outcome of the board meeting over latest quarterly results, and here we have company's management's outlook towards how they see the business doing in next 3-4 quarters. Here we can clearly see that due to the COVID second wave, the business was severely disrupted, especially in the months of April and May, which is very critical time for the revenue of PVC segment of the company due to a lot of agricultural demand in these months. And as we know, PVC segment contributes to 62% of the revenue. This quarter revenue had been impacted badly with it. Another point they have mentioned is that the prices for PVC, which dropped by 19 rupees earlier, had started going up now, which would mean operational profit margins would improve and hence the company will earn more profits. Last thing to notice here is they have an upcoming unit in Guwahati, which will be operational by October 2021. This would mean they will have increased capacity and would be able to fulfill pent-up demands due to past lockdown and in turn will generate better revenues. All in all, we know Supreme Industries is a fundamentally strong company and had been a market leader for a decade now. And the financials show that it is undervalued right now at the price of 2153 while creating this video. And one should consider buying it for long-term investing. That's all for today, friends. Do share your feedback if you like this short analysis.